Everybody, Peter Ciccone, Entrepreneurs Across America. Back at the home base, the Dix Hills Diner. It's Tuesday morning, so that means another episode. And here we are. I got a guy, David Warsaw, from the Wealth Plan. And David is somebody I've been trying to get on the show since the beginning. He's been a part of one of the very first members of Entrepreneurs Across America. Did one of our Zoom chats back when we were all sequestered and not allowed to leave our houses, and we were doing Zoom. He talked about crypto and investing in crypto. And for a Zoom call, we had about 40 people on the call because, the magic words at the time were crypto, Bitcoin, and bing, bang, boom. And Dave is an expert in that. But he's a financial planner and came down. He's back in New York. And Dave, say hello to the world. Tell us about the Wealth Plan and what's happening in 2024. What crazy things can we expect to see in the world of finance, and any advice?
Sure. Well, Peter, thank you so much for having me. I consider you a personal friend, so I'm excited to be here. Listen, I'm doing financial planning for 19 years. I have my own registered investment advisory firm called the Wealth Plan. My office is in Great Neck because I just moved back from Florida. But, in short, I think I love investing, and we could talk, about investing for the next 15 minutes, and we'll definitely discuss it. But look, I'm a core believer in comprehensive planning. So when I meet with my clients, every season we try to discuss different topics, right? So, wintertime is, cash flow and retirement. The second quarter, spring, is tax planning and insurance optimization. Third quarter, summertime, is estate planning and assistance to loved ones. And fourth quarter, which is where we are now, is investment and account review. So I think that you have really good outcomes when you're looking at the whole picture and your advisors giving comprehensive advice. Since we're in the investment and account reviews, and listen, we could take this in a lot of different ways.
Let me ask you this: strategies. When you strategize. Is every strategy for an individual different, or do you basically have one sort of strategy for everybody? Listen, right now, I remember you always wanted a well-diversified portfolio. You wanted a certain mix of when something was going to drop, the other things would come up. Or do your strategies for different people differ across the board?
So it's a good question. So it's really a combination. The financial planning asset management industry has really driven towards model portfolios. And then every firm will decide what models they want to run. Some firms will outsource the models. They'll use another company's models, and they don't even want to touch an account. They don't want anything to do with it. At the Wealth Plan, I actually run the money. I don't want clients to pay an extra fee for a third party to run the money unless I really don't feel I could do it effectively. So philosophically, I think you have to start philosophically before you can get into the specific models. Philosophically, I'm a buy and hold investor. I think that is the best and smartest way to go about that. Buy and hold in contrast to being tactical, where I'm constantly going in and out of the markets, and I'm moving here, and I'm shifting to this, stocks to bonds to cash, to stocks to bonds to this.
You mean, I'll break it down the way I heard that is, you're an investor, not a trader.
That is correct.
Okay.
Meaning, once you decide on a portfolio or try to just stick with it, the market historically has compounded at 10% a year. But most people do not get 10% or anywhere even close. And why? Imagine you have a boat, leaving port to go to, the island of your dreams, right? Well, you're going to get there, right? The boat's going to get there. But if you jump off mid-route, you're not going to get there, and I think that's what happens. So most people aren't really doing a good job of compounding their wealth because of these mistakes.
I don't want to say, okay, the boat's going to get there only if you direct it. And it's not necessarily going to get there. It could be blown ashore somewhere else. So the strategy, you're saying have the strategy, stick to the strategy despite what's happening. Now, when do you adjust the sails?
So it's a great question. So if you buy into that buy and hold approach,
okay,
right? Now it's a question of, well, you're putting together these different building blocks, right? So you got cash, you got bonds, and you got stocks, right? So now everyone's going to determine their own asset allocation, right? Well, so how much do I want in each of those buckets, right? Well, stocks, am I buying domestic stocks? Am I buying international stocks? So, I can tell you for me, most of my models are fully diversified. You have thousands of companies all over the world. That's what I call my core stock model. Now,
How do you find the companies and what rates a good company versus a bad company for investment?
right, so I use ETFs to build the portfolios. These are
Yeah.
funds, right? So in each ETF, you have hundreds or thousands of.
What does
of-
ETF
of-
stand for?
It's an exchange traded fund.
Okay.
It's basically a proxy for the market, right? So the S&P 500 is the U.S. stock market, right?
Okay.
So there's an ETF that replicates that. So once you have this basket of, you have larger companies, you have smaller companies, you have international companies, right? And the weightings, depending on which advisor you're using and how they weight things, now that is your core, your core anchor. So how much do you want to have in stocks? How much do you want to have in bonds? How much do you want to have in cash? It's the way the industry has done it, and it's not necessarily the best thing, it's just really more of a CYA strategy, honestly, was you tell people, hey, what's your risk tolerance, right? Are you a conservative investor? Are you a moderate investor? Are you an aggressive investor? And all that means is the more risk tolerant someone's is, you're putting more and more money in stock. So the original idea that I want to bring, to entrepreneurs across America is that I am very pro equities. I'm very pro real estate because these are the assets that historically have beaten inflation. The goal of growing wealth is to grow your wealth faster than inflation and taxes can take it away. Stocks have a 200-year history of doing that. Bonds and cash do not. The challenge is that, the markets are scary and the news is constantly negative.
I'll repeat that. I love that quote. The goal of wealth management is to build your
Is
wealth.
to grow your wealth faster than the ravages of inflation and taxes can take it away. Yeah, that's it. That's the goal. So
That's simple. That's make more than they're trying to take from you.
Exactly. So stocks historically have done that 10%. Now, so that's my core stock model. I also have a core bond model. I have what I call a thematic fund model.
Let me ask you this
Yeah.
question. I could listen to this guy for hours and I have. He is a good friend, and we have had these discussions. I heard great advice, or somebody gave me a strategy that I loved. 70% of your portfolio are things you never want to sell. Because I had explained to somebody, I hate selling a stock. I'm not even the buy and hold guy. I'm the, buy and keep forever type of person. And when I go away, it goes to my family. Somebody said, 70% should be that. You never want to lose it. But 30% are where you make the tactical changes. 30% are where you can make the adjustments in any. How do you see that as a strategy, and how do you strategize when things are starting to fall? Like you thought something would be terrific and it's just not.
Right. So these are all very good questions. We're gonna have a lot of fun today. So, look, it's all definitions of how you define a strategy. What is tactical, right? For me, once you buy, an individual stock or individual stocks, you are taking major bets on the company. So you should really know and truly believe in that company. And when do you sell it? Well, when things have changed, when you don't believe in it. Remember, the way I run money, I'm not picking those individual companies. I actually have one newsletter I follow because I've looked at a lot of these newsletter services. Zacks has a newsletter. It's $200 a year. If you like individual equities, Zacks puts out a newsletter called the Zacks Top 10.
How do you ZAK?
ZACKS. Zacks.
ZACKS.
Yeah, they're a major stock research firm,
Okay.
Zacks. So they come out with a newsletter called the Top 10, where every January, the guy that runs this newsletter, his name is Shiraz Mian, and you have 10 stocks that he recommends. And then every January, he flips it. It is possible in the middle of the year, he'll drop a stock or two and replace them. So the problem with these kind of newsletter services and strategies is you're really going off of someone else's research. You don't have your own, conviction. So I have another. So I run the Zacks Top 10 for clients. I also have another model called the thematic ETF model. So what's a thematic ETF? Everyone has heard about AI, right? Artificial intelligence, self-driving cars, marijuana.
Or marijuana.
Yeah,
Is that in the self-driving cars?
right. Robotics, genomics. So a lot of these ETF manufacturers, BlackRock, Invesco, Global X, they've launched funds where you can invest in the theme and get 100 companies just by investing really more in the theme. So I've looked at a lot of these.
That would be the ETF.
The ETF, yeah. So if you really believe in AI, it's like, listen, I'm really bullish on AI for the next decade.
Okay.
You could buy an AI ETF, right?
ETF.
So I have 9 ETFs in my model portfolio. And then to answer your earlier question, yeah. So some some clients don't care. They just do it, and I'll give them a very simple core stock, core bond portfolio. Other clients want other strategies, and they just say, "Yeah, Dave, I want your other stuff, your other ingredients. Make me the pizza, the pie with that, and I'll put the allocations together." And others say, "David, I want to build it with you. I want to learn about your strategy and then really custom build it myself."
I remember when I worked at a big company, and I sat down with the financial planning team, the team they had in there that was directing the 401k. They asked me certain questions, the pro forma questions, married, children, blah, 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 risk tolerance. And, I left out the part. I was a recovering gambling addict. But they put it into a computer and they said, okay, this is how we're going to align your portfolio. And I got the feeling, I know the guy's name, I don't want to out him. He had no thought, no personal say. He did what the computer told him to do. And I know you don't do that. I know a couple of other guys I know don't do that. They actually, if I asked you my wife's name and my kid's name, you actually know them. And that matters. That means, you understand the kids are this age, the wife, they're married this long, they want their plans, here's where they want to end up. And let's build a plan together. And it's a different approach than what I thought that computerized approach was. I walked out of there, on the one hand, glad that I was investing in not just my future, my family's future, but on the other hand, I felt something amiss, that it was really nothing more than a computer model.
Yeah, and so this is really where planning kind of kicks in. That's a very good point, Peter. I mean, it's like, at the end of the day, I got to know my clients. I got to know their situation, right? And whenever you're running retirement calculations, at the end of the day, you're assuming some rate of return, some inflation rate. So I use a tool called Income Lab, where in the Q1 meeting, retirement and cash flow, wintertime, which is coming right around the corner, this is the portfolio size. Let's make some very conservative assumptions about the market. What if the market doesn't do the 10%? What if it only does 8? What if it only does 7? What if you're a nervous Nelly and you just need to have 30% of your portfolio in cash? Cash, you can get 5% now. So, this is an interesting time that the stock market has real competition from cash, which has not been the case. What was your option for the last 20 years? It was like, get 0 in the bank or invest. All right, I'll invest.
And now you're getting 5% for your cash.
That's right.
5%, and I did that more than one time. I did that. I'm the treasurer at my church, and my opinion, I'm not a board member, so I can't vote. But they said, well, what should we do? And I said, well, we're doing this for a project later on. We should put it in a money market and for 5%. And I did that with my daughter's college fund because I knew I need that. And it matures in 6 or 7 months. So I knew I'd need it again in September when I did it. And I made money versus doing something else with it where, it was real competition.
Yeah.
But let me ask you a question. When the market has been doing what it's been doing for the last 2 years, where it's, hey, it's up to 34, it was up to 42, now it's back, how do you batten down the hatches and wait? Do you talk people off the ledge? What do you do?
So, yeah, I mean, how
do your strategies also change?
Yeah, so I update my models every year. I'm always looking to make them better and improve them as you get other ideas and to launch new models. So I probably have like around 6 or 7 distinct, models that I run. But to answer your earlier question, like when do you change? Well, when I'm a big believer that you change the portfolio when your plan has changed. Hey, Dave, this is not retirement money. I'm buying a new home in another state, right? Now you don't have a time frame to invest. We can't let the compounding engines of the market work, right? So you now need to change the plan, but you don't change the plan because of this crisis or this political event. Optimism, patience, and discipline. It all starts with an undergirding philosophy. And first off, I mean, for this specific optimism is that, hey, the world's going to get better, that things grow, right? That your house will appreciate in value, the markets do well, life gets better, right?
Amen.
The historical record is that things get better and better and better.
Optimism.
Patience is, hey, the worst we've ever seen was 2008, where for 6 years you made no money. You lost, you had to wait 6 years. Over 200 years, barring the Great Depression. So, patience to just stick with the plan and not jump off the boat because we're trying to get to the island. And then discipline is to keep saving and investing and putting money in when the markets go against you, when things are really bad. Now, for this specific crowd, you should all be investing in your business. You know your KPIs, and you know your figures, and you know the best use of capital for your business. So that's where you should really be investing. You invest outside of your business to diversify.
All right, Dave. Word of advice for 2024? Anything you just want to put out there? No, I'm not saying for a stock tip. Nobody's going to hold him to it. He's not your financial advisor.
Yeah. So work with an advisor that you like and trust and you think makes sense, that can help you put all this together. And lastly, I'm a big believer in alternative investments as well. So if you believe in buying publicly traded companies like the Apples and the Googles and the Microsofts of the world, well, why wouldn't you want to invest in private businesses? Because those should hopefully grow one day to the bigger companies. If you're okay lending money to governments and with treasuries and to companies, why wouldn't you lend to private businesses? Why would you not add real estate to a portfolio? Why would you not add digital assets, cryptocurrency to a portfolio? So I'm a big believer in you really should have, cash, bonds, stocks, private bonds, real estate, and digital assets for that really beautiful portfolio. And I think eventually that's going to become the norm, but we're just trying to be cutting edge here. So.
Quick story about this guy. About 10 years ago, he said, I'm going to buy this stuff called Bitcoin. That was about 10 years ago. I said, what's that? Electronic currency, blah, blah, blah. And I thought he was silly. And, I was wrong. So, the only one silly in that equation was me, right? So, hey, Dave, it was always a pleasure. It's always a learning experience every time you come down. And welcome back to New York, by the way. I'm glad, I can get that breakfast with this guy. I haven't seen him since
like 3-4 years ago, probably. Yeah.
Since your wedding. Since you got married.
That's right. Since my wedding. Yeah, you told me my wedding. Yes. Yes.
Thank you for coming down, guys. Stay the course, I guess, and have a strategy. Look around, see what's going on in the world, and then optimism, patience, and
discipline. Yeah.
Optimism, patience, and discipline. That's it. Those are the keys to success in investing.
Yeah. And you can find me at my website www.thewealthplan.com. 516-400-7111.
Do that again. That was quick.
Yeah, 516-400-7111. www.thewealthplan.com. And don't be shy. You can always call me. I do free a free analysis on your tax return, on your portfolio.
This is a good man here.
Don't be shy.
Don't be shy. He means what he says. And optimism, patience, and discipline. That's all you need, guys. Thank you very much.
Bye, everybody.